Thanks for clicking. The London and St. Thomas Association of Realtors, Lstar, just released its data for the month of February, showing a significant upsurge in our prices all across the board. The release marks the one-year anniversary of London's real estate market hitting its peak price of $825,000, right before the Bank of Canada began to raise rates in March of 2022. And as we'll see, with the Bank of Canada signaling its pause on interest rate hikes at the end of January, and likely to continue that pause at next week's rate announcement, buyers came back to the table in February. So what I want to do today is go over February's data, take a look at how far we've come since this point in time last year, both in terms of payments and mortgage qualification, and then discuss what to look for next. The Bank of Canada is set to make its next interest rate announcement next Wednesday, March 8th, and although the bank is widely expected to maintain its pause, any comment it has on the future of rate hikes will no doubt be felt in the market. We'll obviously have an update out on that announcement on this channel. Click like and subscribe if you want to get that update, but for now, let's get into February's data. Onto the data. First off, the benchmark price. The benchmark price, if you'll remember, is the price of a home, which represents the most popular set of features. The benchmark price rose in February. The benchmark price was sitting at $568,300 in January and rose up to $583,500 last month. So that's about a $15,000 increase in the price of a home that represents the most popular set of features. However, the average price shot up much more in February than did the benchmark. The average price in January was sitting at $564,670, and that surged upward to $614,216, a nearly $50,000 increase in our average price in 1 month. And London also saw a similar increase in the median price of a home. The median price of a home is where half as many homes sold over this price and half as many sold for under. The median price in January was sitting at $547,500, and that bumped up to $588,600 in February, a nearly $40,000 increase again in just 1 month. And homes are going for less under asking than they had prior. If we look at the sales to list price ratio, which measures by how much over or under a home sells for asking, in January, homes were selling for 96.6% of their asking price, and that number went up to 97.5% in February. So, on average, homes were selling for 2.5% below their asking price. And the increase in the price of London's real estate makes sense when we look at the months of inventory, the MOI. The MOI measures if no more homes came to market, how long would it take for London to sell out of all of its inventory? And the MOI in January was sitting at 2.9. So we had 2.9 months worth of inventory available if no more new homes came to market. However, as of the end of February, that number is down to 2.5. And finally, when we look at the median days on market, we see that homes are selling a lot faster than they were before as well. In January, the median days on market was 22.5, and that shrunk down to 17 in February. So half of the homes that were sold in London in February took longer than 17 days to sell, and half as many sold faster. So, in summary, the market heated up in London in February, with the benchmark price up about 15K, the average price up about 50K, the median price up about $40,000, homes selling for less under asking than they had before, more inventory on the market, and homes selling faster. All in all, a real estate market in London that is showing signs of heating back up. But how far have we come since this point in time last year? How far have we come since London was at its peak? 1 year ago, London's average home price reached its peak at $823,842. A decent 5-year fixed insured rate at that point in time was 3.19, and borrowers had to qualify at 5.25%. Using that average home price with a 25-year amortization and minimum down payment requirements, borrowers at that time would have seen a payment of $3,850. Fast forward 1 year, and we have an average home price of $614,000 using a 4.99 interest rate, we have a payment of $3,491. So payments on that average home in London are about $400 cheaper on a 5-year fixed than they were a year ago. And if buyers are hoping that the Bank of Canada will reverse course on rates and don't want to lock themselves into 5 years, they can still go with shorter term options. A 2-year at 5.74 would put that payment at $3,750, or a 3-year at 5.34 would put that payment at $3,612. Either way, whether they take the 2, 3, or 5 year, payments are still much less than they were a year ago. But is qualification any better? If we look at a year ago when we had that $823,000 house price and we qualified at a 5.25% interest rate, borrowers needed to earn $175,000 so long as they took a 25-year amortization and didn't have any debt. Fast forward 1 year and borrowers now have to qualify at 2 points above the contract rate. If the contract rate is 4.99, they have to qualify at 6.99. But if we use that average house price of $614K, qualify at 6.99 with 25-year amortization and zero debt, borrowers now need to earn $150,000. So, all in all, for home buyers, things have gotten a lot better than they were at their peak 1 year ago. Fast forward 1 year from London's peak, and borrowers' payments are now $400 less per month for that same average house. They need to earn about $25,000 less in annual income, and down payment requirements are also about $20,000 less than they were a year ago. With that said, buyers came back to the table in February on the news that the Bank of Canada was going to be pausing rate hikes, and I would assume with the understanding that they are going to be continuing on that pause on rate hikes. With that said, it's not clear that the bank is going to be able to continue that pause. As we've talked about so many times on this channel, there's ample evidence coming out of the US that the Fed is going to be raising rates, and the Bank of Canada very well may have to follow the Fed sooner rather than later. So while we did see a major significant increase in London's real estate prices in February, with the benchmark, average, and median prices all up across the board, it's only been 1 month. We're not quite out of the woods yet. With that said, we will continue to track the Bank of Canada and London's real estate market on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.